Hello guys and welcome back in this new backtesting video. Today we are going to backtest a new high win rate trading strategy, and always I'm going to reveal you the real average success rate of this strategy of years of data. But for today's video I decided to show you all the steps behind making this video and behind backtesting in a good way a trading strategy. So stay until the end of the video to learn how I make this video and how I backtest the strategy with some tips. So let's start about talking about it. I'm going to backtest this strategy on the symbols and on the time frames. How did I choose these time frames and these symbols? When the video say a specific symbols or time frame, I use the one he say. But in this video it didn't say that, so I choose it in an arbitrary way. So for today's video we are going to see a backtest on this forex pairs and on the 15-minute time frame. Many of you asked me which time frame to use. I prefer to use the 15-minute or higher time frame, because 5 minute or 1 minute or time frame like these are more noisy, more noise. There's more noise and I don't like noise. Okay, he didn't say a risk to reward ratio. I choose the 1.5 because I think that 1 to 2 are the best risk to reward ratio, sometimes 3, but not higher time frame. The leverage I'm using is 50, that's a common value for every trading platform to have a 50 as a leverage, and as alpha confidence interval I decided to use 0.01. So we have a confidence interval at 99% sure. We are 90% sure that our success rate will be located here. Okay. So let's start about talking about this strategy. I'm not going to show you already the code, but I want to show you the default result of this strategy. And as you can see, the default results are not as good as it claims. You would have lost all your money with commissions, without commissions. In fact, in today's video, I'm not to use the first strategy he said in this video, but I wanted to explain you what I did now. So basically, what we can see now, we can see that it's not profitable. We can see that it's not statistically profitable. We can see that there is a high number of trades, and look at the balance. It's going down and down. What does it mean? Maybe if instead of opening a buy position we would have opened a sell position, and instead of opening a sell position we would have opened a buy position, we would have made big profits. Let's see. So now what I do, I went back to my software. Here is all the code for this strategy. I will leave anyway the link of this video in the description so you can check it. These are the conditions for the buy on the parabolic SAR and on the close, so don't worry, I'm going to explain it during the video. So if you don't know what is a parabolic SAR or EMA, don't worry. But what I want to show you now is that this was the default order he said you would have taken if you have listened to his video. So opening position at the last close and the stop loss at the parabolic SAR value, and this would have been a buy position always in the default strategy. But let's try to change a bit the code. Let's uncomment this line and let's use a sell position instead of a buy, and let's say that we are switching take profit and stop loss. So stop loss now would have been, I calculated the stop loss with this formula, so don't worry, we'll explain it during the video with some examples. And now I'm doing the same thing for the sell position. So here we can see the default order for the sell, okay, at opening at last close and stop loss at the parabolic SAR. But now I'm opening a buy position with these settings. The opening price formula will be always the same, but what changes is that the stop loss price formula. So let's go to the chart and let's see some examples of this strategy. Let's start with these two trades in the USD CAD. So first of all the indicators you will need. I have talked about EMA, so you search multiple EMA because we will need 2 EMA, so choosing this indicator. And then you will need a parabolic SAR. So parabolic SAR, this indicator, okay? Now that you have this indicator on the chart, let's go to the settings. For the parabolic SAR are the default one. And for the EMA, you will set this one to 20, this one to 30, and you will check only these two. These three, you will not need these three. Okay. Now you are ready to trade. Now, how you can open a buy position? Okay. You have to check for some conditions. First of all, this is the parabolic SAR. These dots are from the parabolic SAR. You have to check that there is at least a dot behind the candles and then a dot above the candle. Here it happens. Then you have to check that the EMA 20, this line, is below the EMA 30, and the close of this candle didn't touch the EMA 20 and EMA 30 in the last 5 candles. And as you can see, you would have opened your position, buy position, and it would have been a profit. How I set the take profit and stop loss? You start by placing a buy order here. Then you set your take profit to the last parabolic SAR, and the stop loss, you adjust your stop loss in order to see 1 here. You have to see 1. After you see 1, you change your take profit in order to have 1.5. Here it happens, and as you can see, it would have been a success. Let's see a short one. So you have to check for a dot above the candle and a dot below the candle. Then you have to check for EMA 20 above EMA 30, and then you have to check that the last 5 close didn't touch the EMA 20 and EMA 30. You're opening your position at the last close, and first of all you have to set your take profit at parabolic SAR. You adjust your stop loss in order to have a 1, and then you change your take profit until you see 1.5. Here it happens, and as you can see, another success. As you can see, with the default strategy, this one would have been a short trade, and with the default strategy, this one would have been a buy trade. Let's see a last short trade. We have the dot above, the dot below. We can see that EMA 20 is above EMA 30, and the last 5 close didn't touch EMA 20 and EMA 30. You can open your short position at the last close, setting first of all your take profit to the parabolic SAR, so this dot. Then you set your stop loss until you see 1 here, and then you change it until you see 1.5. Here you can see that, so you're ready to open your position, and as you can see, it would have been another success. But now we had the assumption that with these settings our success rate would have been better and our balance would have been increased. But now it's time to run the strategy on the trained dataset, and let's see how it performs. And then we are going also to run the strategy on the test dataset. So let's see how it performs. Okay, as we can see, we have 41 as our success rate on the trained dataset, and on the test dataset 39. So the first thing I do now is to check. This average success rate in the test dataset, it's located in this average success rate? Yes, it is. So if it is in the confidence interval, we cannot say that this average success rate is different from this one, because this is a confidence interval test at 90% sureness. Okay, after that, we can see that the strategy is statistically profitable? No. So we can also say that there is a possibility that in this dataset you would have not been profitable, and in this case it happens. That's important. So always look at the confidence interval. You can not immediately decide at 100% sureness, but 90% sureness that you can lose money on the test dataset. And after that, what we can see now, that the number of trades is really high as before, as always, because it's the same strategy basically, but instead of opening a buy, we are opening a sell. Instead of opening a sell, we are opening a buy. And yeah, you would have lost money with the commissions, and you would have made the profit without commissions. Okay, and that it's another important thing, because you can have 80% as average success rate, but if you have your the commissions are eating all your profits, basically it's a bullshit strategy. And in this case, as you can see, yeah, good. We have 41 as average success rate, but if with the commissions we are losing all the profits, it's a bit useless, the strategy. Okay, and these are the steps. This is when I evaluate the strategy with the default settings. Yeah, these are not the default settings because I have already made some changes, but definitely it's better than before. Okay, after that, what I do? After that, after I checked for the confidence interval, the test dataset in the confidence interval, I try with statistical analysis, or by using some other criteria before using statistical analysis, or only use other criteria. And for today's video, I decided to use other trading comparator that I have in my software. And what trading comparator I used? I used the check engulfing candle. So let's uncomment this line. So what I'm doing now, I'm saying check engulfing candle, calculate. I'm passing the last two candles. The condition of the last engulfing candles must be matched on the all candles, so the last two basically. And I'm checking for a bullish engulfing candle. Then I go here and I add this line because I want to check also for the result of the engulfing candle. Why I say the bullish when I opening a sell position? Because I want to try. There is not an arbitrary rule you have to use bearish or bullish. Maybe bullish performs better than bearish, I don't know. So for today's video I decided to use bullish, and here I'm saying bearish and also adding the result of this engulfing candle to the code. Okay, now it's time to run again the strategy after adding this new trading comparator. And let's see if we made some improvements. If we made some improvements, check it if are really improvement by checking confidence interval, statistically confidence interval, if we are profitable, we are not profitable, and also to check if the test dataset is located in the confidence interval. So let's start by running the strategy on the train dataset, and let's see how it performs. So let's see. Okay, as we can see, we have our average success rate is better than before, 1% and more points. But what is worst? Worst is the confidence interval. Our lower confidence interval is lower than the one we had on the reversal basic strategy. Okay, and what does it mean? It means that this improvement was not as good as I thought. It happens. You have to try. As you can see, the strategy would have not been statistically profitable. The number of trades is now 1,000 and before was 5,000. And yeah, you would have been profitable with the without the commissions, and with commissions you would have almost break even. Okay, and yeah, these are definitely not good results because you want to be profitable also with commissions, not only without commissions. So these things basically is telling us, okay, this strategy is not good with these improvements, I'm saying, because maybe with other improvements, maybe MACD crossover, maybe by checking RSI, I don't know. I decided to use this criteria for today's video because I want to explain you how I backtest all the strategies on this channel, and this was not a good improvement. And let's see also the test dataset. As you can see, is 39.82. That it's 0.2 percentile higher than before. So we had 1.5 percentile improvements in the train and 0.2 on the test dataset. Is it a good result? Definitely not. Basically, we have found some pattern on the trained dataset, but it's not respected on the test dataset. And as you can see, you would have lost money without commissions and also with commissions. So basically, these results are not so astonishing. And what I would have done now, basically I would have tried with other statistical techniques to improve the strategy, maybe with checking RSI, checking if there's a pattern on the RSI and a pattern on the MACD and many other things. There is a plenty of ways in which you can improve your strategy. Today I have only showed you one. It's you have to try. You have to try. Understand all the results are you seeing now. You're seeing now. Have a good. You must use your mind to understand if these are good values or not. But for today's video, I think it's all. I remind you that I'm not a financial advisor. These are not financial advices, and this strategy may not perform well in the future like it did in the past. Trading is very dangerous, pay attention, and I'm not responsible of any use of these strategies that I'm showing in this video and on this channel. If you enjoyed this content, I remind you to leave a like, leave a comment, subscribe, and see you in a next video. Bye!